Nigeria, we have a long history that predates the country's official independence, which was October 1st, 1960. Today, the banking sector has proved its resilience throughout the country's political upheavals, economic volatility, and tough regulatory actions. Speaking to the robust history of the Nigerian banking industry on the show tonight is Dr. Bunmi Bajomo. She is the Group Head Corporate Banking and Manufacturing at First Bank of Nigeria, the oldest banking institution in Nigeria. And she's joining us through the show. Good evening, madam, and thank you very much for coming through on the show tonight. Let's begin this conversation briefly about Nigeria's banking industry, the country's infancy or independence.
Thank you, Bruce. Thanks for having me. Happy Independence, Nigeria. Thank you. So for us to do justice to the evolution of banking in Nigeria, I'll touch briefly on how what we know today as the banking industry actually came into being. Today's banking industry actually emanated from the establishment of a bank called the African Banking Corporation in the year 1854. This bank was later acquired by British Bank for West Africa, which later on metamorphosed into what you know as the First Bank of Nigeria, PLC, the bank I proudly belong to. But the banking landscape had not always been this developed. In the early 1950s to 1960, the industry was largely unregulated, which culminated especially around the 1930s to 1940 in the loss of a lot of indigenous owned institutions. Actually, as of that time, the total number of commercial banking in Nigeria were about 12, which were largely owned by indigenous person entrepreneurs who had the financial market development at their heart. The failure of those banks in 1940 to 1950 prompted the people you know as our nationalists, who were at the vanguard of independence, to push the colonial administration to establish to promulgate the Banking Ordinance Act of 1958. This later culminated in the Banking Act of 1959, which actually set up the CBN. But when the CBN came onto the platform, the CBN was not able to effectively regulate because it neither had the platform nor the instrument to do. And this led to the CBN partnering with operators in the market as of them to jointly form the Lagos Commodity Exchange, which is now the Nigerian Stock Exchange, and the Capital Issuance Commission, which is now known as the Security and Exchange Commission. But with that evolution and the promulgation of the Banking Act, you had a number of commercial banks moving from 12 to 17 and then to 19. It's interesting that what we know now today as merchant banking were actually not in existence in 1969. The evolution of merchant banking came with the deregulation of the market, and by 1977, we now had 4 merchant banks and 12 commercial banks. But with the advent of the structural adjustment program of the Babangida era, that actually eroded deregulation in Nigerian banking landscape, and the objective of SAP was to foster indigenous partnership in the banking industry in Nigeria.
Interesting, between 1960 and 1970, we all understood the Civil War of 1967 to 71, kind of. So that period, of course. But it looks like after the Civil War, the banking sector started moving on, and you're getting into the 1980s period, because that looks like a very important milestone within the Nigeria's banking space between 1980 to the early 2000s. This period, tell me about some of the key developments. You're just talking about the structural adjustment program. Some folks say we had a lot of financial liberalization and other things.
Thank you. So, like I said, the modern era of deregulation and growth of the banking sector works actually on the premise of the structural adjustment program.
Which was during the President
Which was 1986, actually. It started, it was during the Babangida year, 1986 to 1994. And with the advent of STAP and the deregulation of the market, deregulation of interest rate, deregulation of the exchange rate, it led to influx of a lot of partnership and capital flow into Nigerian economy. And by the 1994, you had close to 65 commercial banking, and the merchant bank that started so late, you actually had 51 merchant banks operating in Nigeria. But the growth, like you remember, it wasn't only for the deposit money bank. You also had the non-bank financial institution. You had the finance houses. I'm sure you will all remember the Work of Forum. And then you have the the People's Bank and the Community Development Bank.
We have the mortgage banking period
Yes,
as well. I remember the finance houses and quite a whole lot of liberalization. And what the 1980s of the Babangida's administration spun off was a kind of an implosion that happened within the banking and financial services, broadly speaking. They had the first phase of the community banking in Nigeria. But again, how important were these developments? If you take it further into the 2000s, then we'll talk about the consolidation period, because after we came in with about 120, about 150 banks, they all came down to about 90, and then later you had, after we had what you call the failed bank period, then comes the consolidation of 2004.
So post the SAP era, you have the Mr. Paulo Guma's era, you have the Sanusi, the J.O. Sanusi era. The common attribute of all of this is that everybody tried to take banking to the next level. So you have interest rate deregulation. And in the 2001, you have what you call universal banking. The Paulo Guma era moved capitalization to 500, whereas Sanusi took it a notch further to 2 billion. He was in the process of complying with the 2 billion capitalization requirement. And upon his handing over to Professor Sasoludo, that you have that 13-point agenda in 2004 with the mandate for banks to recapitalize with a minimum capitalization of 25 billion. As of that time, the total number of banks in Nigeria were 89 deposit money bank. But as of the date of the announcement, you have about 10 banks that could conveniently meet the 25 billion capitalization. You have some at 10 who would have, and then you have some that were so far off with capitalization less than 5 billion. So this led to a lot of emergence of merger and acquisition, synergy, partnership. But what happened is that consolidation changed the Nigerian banking landscape significantly. Banks became quite sound, competitive, and it signaled the emergence of Nigerian bank on the international stage across Africa with a lot of emergence. But what you then find is that with all the benefits of consolidation, by the way, the 13-point agenda also had a policy approach to it. So it wasn't only about consolidation. There was the policy agenda that established what you now call the asymmetric corridor around the standing lending facility and around the standing deposit facility. But consolidation was good. It took the banking industry a notch higher. It turned micro institution, the merchant bank, into mega institution that you see. I wouldn't like to mention names, so I'm not accused of favoritism. But with that consolidation also, it seemed like banking industry grew at an unprecedented rate.
But did you see the banking consolidation as a major milestone over the last 61 years?
Absolutely. It was a fundamental milestone. It was something that hadn't been done before. With consolidation, by 2005, you see a lot of Nigerian banks now ranking among the top 20 banks across Africa, and also on the list of first 1,000 banks in the world.
But again, there are a whole lot more fundamental issues. Let's talk about Madam Bunmi Bajomo and everyone. Stick around, everyone. When we come back, we'll talk about the cashless policy, which was a policy that seemed to take everyone by storm. But we have a whole lot more to talk about this when we return. We'll be right back, everyone. Yeah, we're talking banking history and its evolution over the past 6 decades. Dr. Bunmi Bajomo of First Bank of Nigeria. Thanks for standing by, madam. Now, let's look at the interventions of 2009 and 2010 by the central bank, which were also notable. But just before that, let's talk about the cashless policy.
Thank you, Botsin. Thank you. So the cashless policy is one of the cardinal agenda of the Lamido Sanusi Central Bank, which started in 2009 with the rescue of about 9 financial institutions that were deemed to be in distress then. So the major thing was that you had the rescue of those banks, and then there were lots of institutions of various policy in order to strengthen the financial sector and to maintain the health of the financial system. Why that was seen as controversial, I will look at it from an economic point of view. But because before I get there, in terms of cashless policy, that was one other fundamental thing which has changed the entire landscape of the Nigerian banking industry. So he actually moved the Nigerian banking industry from a brick and mortar industry to an industry now powered by technology, powered by e-banking. With the advent of the cashless policy, you had CBN putting restriction on amount that individual and corporate can withdraw. For an individual, up to 500,000 can be withdrawn across any of the platform. For a corporate, it will be 3 million. 3 million. Any breach of that will attract 2% for individual of the breach amount and 3% for the corporate. This actually was promulgated in 2011, but it started January 1st with a pilot in Lagos. And then from then on, a year afterwards, it moved to 18 months afterwards, it moved to 5 states, Port Harcourt,
yes.
Ogun State, and then South Rivers. Yes.
Well, what many Nigerians will remember about the cashless policy is the e-payments and how it is in which folks now begin to swipe their cards for merchants and a few other things using ATMs.
Yes, so thank you. Yes, as it was shown on the screen, it actually changed the entire landscape of the Nigerian financial system. You will now see, you can judge the success of this program by the evolution of the various platforms. You will see that before now, it was check in operation. Yeah. Now we've de-emphasized the use of checkbook. I can't remember when last I wrote a check for anyone. But you've moved from the then National Electronic Payment System to now ATM, and you've seen significant growth in the volume and value of transaction on the ATM platform. You've seen significant growth in terms of the web operation from the previous level of for ATM transaction of around 1 trillion. You've seen ATM transaction going far above 6 trillion. You've seen all of those projections across each of those platforms. And then now you are talking about fintech incursion. There might not have been fintech if there was no cashless policy. Cashless policy opened us to another frontier. And then you see both banks, telecoms company, and even the emerging fintech operators now leveraging the cashless policy, just like it happens in East Africa and every other place in the world. In fact, I can tell you that with what we are doing in Nigeria, it's actually more sophisticated than even some developed country, because in Nigeria, we don't write so much checks anymore.
That's what I want to ask, that some folks say Nigeria has one of the best payment and settlement system, banking system, not just in Africa, but anywhere in the world.
I agree with you, because, I mean, we all travel and we still see that, okay, you can still go to some financial institution and fill your teller to make deposit or so. In Nigeria, you can do that, just with a click of the button or right there on your phone. Now, Nigerians are luxury conscious person. So the use of smartphone, at least from the middle income to upper income segment, is not really an issue. So this has propelled us into another frontier. And what the future holds for everyone is that you will then see an amalgamation of fintech and banking. You think there will be a conflict, but I don't think there should be a conflict, because actually they complement each other.
You bankers are not scared.
No, absolutely, because ideally it should complement. Where human resource cannot leapfrog, fintech should leapfrog, and then for some specialized advisory services that it's impossible for machine to interpret, given the intuition of an average human, then you can deploy skilled resources in that direction in order to leapfrog it into the next level.
One of the things you will have to deal with in your industry, in banking, is regulation. Apart from the securities exchange market, I'm not sure of any other industry that goes through as many regulatory hammers sometimes like the banking industry in history. So if you look at even the consolidation, which was well praised by a number of historians and others, I'm sure there's a bit of a downside as to, well, we're really prepared for that particular 18 months intervention or program that Soludo took the banking industry through. Give me a minute on that, very quickly, looking back. Okay, thank you. Looking back, I think, like I said, the industry was not prepared. Nobody saw it coming. But it takes a decisive leader, a firm leader, to effect a change and to change mindset. And that was what you saw in the consolidation exercise. Of course, initially, you had so many people writing epistles against the policy, but policy is not new.
It has been implemented across Indonesia and several other countries. If he had not enforced it that way, perhaps we wouldn't be where we are today. But it has its drawback, and you see it in a lot of abuses that took place, over-raising of capital, and the distress that emanated, leading to 32.8% in non-performing loan as of takeover in 2009.
But here we are today in 2021. Would you say, if you put the context of the entire banking industry history together, that your industry is back, is better than it was 61 years ago?
Oh, absolutely. So we've grown, we've partnered, we can compete effectively across the world. You know, the details is in the numbers. So if I look at the total asset of the Nigerian banking industry, in 2004, it was just above 1 trillion. Today, we're talking about 50-something trillion. In terms of profitability, we're talking about significant sum in trillion, right? Across all of the parameters. Before then, we were struggling with capital adequacy ratio of 6%, 8%. Now, everybody is consistently above the regulatory minimum, whether 10% or 15%, depending on your market. So in terms of the parameters, indicators, the industry has fared absolutely well. But regulator continues. We still battle with the CRR issues. We still battle with the FX instability and restriction around it. We still battle with liquidity issues sometimes.
Dr. Bunmi Bajomo, you guys are like cats with 9 lives. If you survive 61 years of a regulatory environment, I'm sure you can survive a whole lot more in the industry. But your point is noted, what the regulators are doing in the industry. Thank you so much. We appreciate your insight on the history and state of the Nigerian banking industry today. See you next time and have a pleasant evening.
Thank you. We always
Dr.
try.
Bunmi Bajomo, Group Head, Corporate Banking and Manufacturing at First Bank of Nigeria.